Afternoon. How are you all doing? So I'm a little bit late this afternoon even. I was just engrossed in Lagarde. We just shut her up. We get rid of her. Get rid of Lagarde. Yeah, so I was just watching the ECB press conference and I got a little bit engrossed in it. So yeah, right. I'm just testing the sentiment EA live. Just want to see. I'm just trying to find something I can actually get in a trade on, but I can't. So I'm going to try that anyway. But I'm just going to leave that running because that's just something I'm testing out. Right. Afternoon, Ladder, Dean, Luke, Chris. Afternoon, Diamond. So yeah, we've just had all the news. So rates for the pound have gone up to 4. Rates for the euro have gone up. Oops, there she is again. Gone up to 3. So all as expected from a rate perspective. So yeah, those will have obviously little impact on the core bias scorecard because they've both gone up by 4. So the only thing that will be impacted, nothing's going to be impacted by those at all. No, nothing changes because all we've done is we've moved up. We haven't overtaken. Nobody's overtaken anybody else and made themselves more favourable than anybody else. We're just going up. Rate rises obviously are going up. So interest rate divergence obviously is better for the euro and the pound than it is for the other currencies at the moment. But it's interesting watching Lagarde. The market's reaction to what she was saying. Obviously, the market has sold off when she was speaking. Afternoon, Frank and Warren. Which is interesting because she hasn't said anything bearish at all in the press conference. I was watching it. So we had the rate announcement. Obviously, we had a bit of a push up. Then we had a bit of a push down. We took that liquidity. I was expecting basically after that liquidity was taken to get a rally. But what we have actually done is we've pushed down further. So there's a few areas, if you look at the pound pairs, I've got the euro pound up at the moment. This was a beauty. Look at this. If you ever want evidence that the market runs on liquidity, that's it. Look at that. That is the pound rate announcement. Yeah. Everybody that's entered long in London, everybody that's entered long in London is there. Not anymore. That's the way it works. So, and then we pushed up. So I got out long on the euro pound. I've banked a euro pound this morning. And I've got in again. The EA is running on this. So the EA is running on it. So it's just going to get me in. It's going to keep getting me in on the euro pound long because I like the euro long and I like the pound short. The combined sentiment, it's a +6 combined sentiment euro pound long. So I'm long in it. But it's interesting the fact that they dropped it on the press conference because she hasn't said anything we don't know, and she hasn't said anything detrimental to what she said before, which is all bullish. So this is bullish. What she's saying in the press conference is bullish. So I'm expecting when the press conference finishes, which is why I was watching it, to get a little bit of a rally off the euro this afternoon. But yeah, it's reaching 4 areas at the moment. But there's nothing bearish really about what she's been saying. So there's no reason for this. It's just a move. Afternoon, Brian. So we had a beautiful ORB on the DAX this morning. Absolutely killed it. It's a lovely one. I just wish that it did. Wish it did that every day. So there was my ORB long. I got out here. And we've obviously with the euro dropping, DAX is pushing. So if you want to trade the DAX this afternoon, we're 125 ADR. Just had a big bearish engulfing going in, and I'm fully expecting the euro to rally, which means that's coming down. But we will see. Not necessarily going to happen. I've been trading the NAS this afternoon, though, so I'm not doing that. So we've had a big pump on this as well. Obviously, all the markets have moved in the same direction. So the Nasdaq this afternoon, we've had a big move on the Nas. Obviously, FOMC moved it up because the US dollar tanked, and we've had a decent movement this morning. We've also got Meta stock, which has done well in earnings. February, where are we? There we are. So we had Meta last night. We've got Google, Amazon, Apple, Ford, Qualcomm, Starbucks as well. But some big names coming out after market today. So the market's going to want to factor in some speculative moves on those, I suspect. There'll be information out about what they're expecting these to be. Even if they miss and it's an increase, we know what to do. So we should get some decent movement on the NAS. Not sure which way it's going to go because we've had a big rally already today. Market's already priced a lot of movement in ahead of the open. We've still got a fair old distance to go. We've got 117 point move potentially to the open. So we'll see. We've got 1 minute to go. We'll see where we go. So yeah, good morning this morning. So I've banked 2.17%. Just sitting in drawdown on the euro at the moment. Unfortunately, euro's not gone the way I wanted it to go today. Neither is the Swiss franc. But anyway, we shall wait. So Swiss yen is down at ADR at the moment. Will I get a second on that? 54? No, I won't get a second on that. I'm not going to take a manual. I'm just going to let it play out. So we'll see what happens with that one. So ADRs, excuse me, ADRs today. Swiss yen, which we're on at the moment. So that's a nice ADR hit to the downside. I'm long on that one at the moment. If we look at the sentiment on the Swiss yen, it's here somewhere. Swiss yen sentiment is a long, not a massive long, but it is a long. So we have where's the Swiss yen? 72% of the market is short, so it's a pretty good one. 75 is where we go to a +2. That means really short, which means we want to be really long. So still like it down there. I don't think I'm going to get a reversal alert on it though, because it's not far enough away for me to get a second position. Quite a few ADRs. Just watch Nasdaq. We're open. I'm long. God damn it! Missed one of my buy limits. My buy orders that we moved too fast. Market went too quick. Tried to put a buy on and got a limit order, unfortunately. So, yeah, nothing I can do about that one. Missed it. Never mind. I got 2 on. 2 out of 3 is not bad, is it? I'll take it. Take 2 out of 3. That's annoying. Should be 3 positions, that should, but never mind. So break even average on those 2 at the moment. So there's my average. I'm going to break even on this initial move by those things. It's annoying. See, that should have been a profit, but missed the bloody order. Market moved too fast. Nothing I can do. Didn't take any of mine. No, it's the trouble. The offset, by the time we've closed the candle, yeah, the EA goes, right, let's place the orders. It goes to place the orders. By the time the order is placed, the market has already moved, and it's moving so fast that it goes to place the order. And as you can see, it could only get a limit order on because we'd already gone past price. So it still places the order, just, yeah. It doesn't happen often. It's very rare that happens. But this is the trouble with trading the pre-market 15, is this initial candle is like ding, 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 bang, gone. Yeah, with the 5 minute or the 15 minute opening range, obviously the pace of the market is a lot slower by the time you get to the 5:15. But the pre-market 15, you are trading, a dump of a million contracts, boom, gone. You don't get a choice. That's a shame. Never mind. We'll see what happens. I will trade this manually as well. But I'll see if I can get captured back in. Yeah, look at that. Look at where it's drawn, the opening range, the second opening range highlight. Yeah, these should both be at the same level. By the time, that shows you how fast that moved, yeah? So what the EA does, at that close of that candle, it then goes, find me the opening range high, yeah, for level 1. By the time it had found the opening range high for level 1 and placed the order and moved on to the second part of the algorithm, which is find me opening range high 2, price was there. So in however many milliseconds it took to process order 1 and 2, the market had moved that far. Shows you how fast that moved today. That's a quickie, wasn't it? There's a lot of buyers out there today, boys. So yeah. Very annoying. Never mind. I will get in on a limit though. So I'll still get in on that limit. If we come back down, I'll get in on that limit. Ideally, what I'd like to do now is have this candle close back down here so I can place the rest of the limits and then go. There we go. That'll do me nicely. Oh, this me look. Oh, this is a volatile one today. Be careful today. This is mental. Jesus. Do you see like the speed that thing collapsed there? How many contracts do you think somebody just placed in the market then to pop that down that quick? Look at this thing. It's all over the place today. ADR, Euro CAD. Still coming down on the Euro. I suspect the press conference is over. Let me just quickly check. No, she's still going on. I'll leave that there so we can have a look at that in a bit. That's annoying. Missed that. Never mind. That was an add-on order, by the way. So I've got the EA set to add to winners, but it's going to go without me. This is the problem with this set file. Sometimes you just get left behind. Quite the divergence again. Oh, yeah, I haven't looked at the Dow. Let's have a look at the Dow. Yeah, this is happening every day now, the divergence. We're getting this on a regular basis. I'm just going to cancel this limit. Just going to intervene with this one because the speed this Dow is coming down, if the DAX is the lagger today, this could come down very, very hard and fast because the Dow is coming down very quick. So we got divergence in the fact that we've got NASDAQ pushing, Dow pulling. One of these is going to take control. And at the moment, the Dow is certainly the stronger of the two, isn't it? So what I don't want to do is get gathered up on a limit order and put in a massive bearish move. If it closes back down inside the range, then fair play. But I mean, just going to cancel that limit. I have a 10 points trailing stop, so I caught some of the points there. Cool. Yeah, that 10 point is the one to use. The 10 point is the most profitable, but you are going to get stopped out really fast. God, if you had a 10 pointer on the DAX this morning, actually you'd have got out pretty much where I did. So I only had a 20 on it, and I got out there. So we will not be at our peak in March. Okay, that's bullish. Come on, market. Why are you not paying any attention to what she's saying? She's just told you she's going to raise the interest rates again in April, and you're not interested. What's going on? There you go. Jeez. There we go. So NAS is now going to collapse out the lows. We've got 2.5 minutes left on this candle. Just found some buyers in there. Okay, so let's see. This might be a false move on the Dow. We might find some limits triggering on the Globex lows, which is here. This is the Globex low from today. So we might find we get some buyers here, but there's a lot of sellers on board at the moment, isn't there? This is a volatile one. I like it. Euro US dollar 150 ADR. I've got that open actually. Still pushing down. They're not liking what she's saying at all, are they, today? I'm not quite sure why. She certainly hasn't said anything bearish that I've seen anyway. Wow, these moves today, yeah, they are big ladder. Big volatile one today. After yesterday's shenanigans, my wife bought me a stress toy today. So I've got a, you know, Stretch Armstrong. I've got a Stretch Darth Vader. So I'm stretching his legs out when I get stressed. So when the market is annoying me, I can basically pull Darth Vader's arms and legs so hard that he screams and gets my frustration out. So I'm just pulling his legs off. There we go. Just thought I'd share that. Wow, this Dow. Anybody trading the Dow pre-market 15? If so, well done. You got in there. My God, you are rich. And this thing has not pulled. That's the pullback. So that's the extent of the pullback we've had on the Dow so far. 3.8. Oh, why is this NASDAQ holding up? Look at this. Massive divergence today. Massive. One of these things is going to ping with an incredible force in a minute. And I don't know which. Dow, we're just running into support. FOMC support. Whew. This is holding up, this NASDAQ. You need to sit and wait. This is too volatile at the moment. You need to sit and wait and get some idea of where we're going. Dixie's on fire, which is wondering why the NAS isn't. So yeah, Euro US dollar is obviously dropping. So this is the Dixie in reverse. So if this is going down, the US dollar is pushing. If US dollar is pushing, we would expect indices to drop. So NASDAQ's really not playing ball at all at the moment, is it? Confusion. If confused equals no trading. Frank, you got on it. Exit at 1.1%. Yeah, don't blame you. I mean, if I saw a move like that on the Dow, as soon as that thing started to pull back, I would be out as well. Nobody would expect that. That's a huge move for the Dow. Huge. So done. It's the entire Globex session done in 10 minutes. Look. It's fast. Euro Swiss ADR still coming down the euro. The guard still talking. Yeah. Can you shut up now? You're really annoying me. She's not helping. She's meant to be doing the opposite. She's meant to be pumping the market, not dumping it. Okay, so euro pound has just taken out the lows. So this could be the terminal move here. So everybody that longed it got taken out. Yeah, we saw that pump. Everybody that now longed on the pump has got their stop there. They're now dead again. Now you can move it. New highs on the NASDAQ. So your 15-minute opening range, we've got 3 minutes left, but your 15-minute opening range is sitting there. So I am going to flip over to manual mode and, oops, not on M15, on M5, and potentially start looking for an entry on this. Not really sure which way to go though at the moment. Got 2.5 minutes left. So all these ADRs, you've got lots of opportunities on ADRs, especially on all of these euros, yeah? So there's a lot. There's a lot of potential opportunities for euro entries. So euro CAD. That's euro odd. I'm going to say, why has that not got ADR? Euro CAD, ADR. Yeah, to the downside. Euro Swiss has hit ADR. Euro Pound has hit ADR. Those are the three that I'm on at the moment. Euro Yen also has hit. 125 ADR. Yen I'd be a little bit more cautious of, because money flowing out of US dollar or into US dollar will affect the yen. So we may be seeing yen strength coming in along with the US dollar strength at the moment. Euro New Zealand also down at the blows, and obviously Euro US dollar. US dollar's pumping, Euro's dumping, so this one's got the biggest ADR. Yeah, because obviously you've got a really weak move against a really strong move at the same time. So again, more extended. Look for levels. So again, that is FOMC completely undone. This is what I was worried about with this US dollar. Whether or not that was a real move, or whether or not they actually are slightly more bullish on the US. We need to wait and see. But the Fed certainly wasn't massively bullish on it, was it? 1.5 minutes until we're done. The pound obviously has moved off of the rates. So the pound, we've got complete whipsaws on everything, because obviously we've had the rate announcement and now it's tanking. So pound would still be looking for shorts. So any of these are all going to be ADR hits to the downside. I'm not interested in longing the pound at all. Everything Bailey came out and said today was not good at all. The only positive thing I could find in there was the fact that we are only going to go into recession by 1%, not 3%. Whoopie-doo. We're still going into recession. So that's not good. However, the guard, on the other hand, hasn't said anything negative. So I'm not quite sure why. Bullish. Yeah, we're going into more interest rates. We're more attractive. Yeah, come and put your money in the euro. You'll earn more. Why is nobody doing it? I think we will find we'll probably get a reversal on this soon, but certainly at the moment they're not happy, are they? Right, NASDAQ, 7 seconds, 15-minute opening range is in there. Okay, so we are bang in the middle of it at the moment. So interesting to see where we go today with the DAX, the NASDAQ. The Dow is just not giving up the ghost. It's bearish as you like. So I'd be more inclined to short the NASDAQ, because the Dow is massively tanking. So is the S&P. Look, I'm shorting this. Where should I go? What's our range at the moment? 600. I'm going to go one sell there. I'm going to take another sell on the break. S&P is coming down hard. Dow is coming down hard. NASDAQ's holding up, I think, on literally on the strength of Meta. On the Meta buy. Where's the stock price gone? What? Well, they've been buying Meta up, basically, so I don't quite know why that's not working. Where's the daily? That's broken. Yeah, that's broke. I don't know what's going on with that, but anyway. So yeah, I think that's why we've been holding up at the open there. But obviously Meta is just one stock. The 5-minute ORB bought a 2-to-1 risk reward. Yeah, that's cool. So we've got ADR to the upside. So looking at where we're going with these potentially today, depending on whether this Dow holds, all we've done is literally undo FOMC. So there is potential that we're going to find buyers here, because this is where the FOMC move started. So this might be wrong, this trade here, because the NASDAQ might be actually what we should be paying attention to, and this is a fake move from the Dow. So we need to watch this. ADR on gold as well. That'll be on the US dollar move. So the US dollar is still pushing at the moment, which again, we would expect to see the inverse happening. She's saying that. Yeah, well, no, we are still bullish. Lovely tweezer bottoms there on the US dollar yen. Look. Lovely long signal. Mixed today, very difficult. EU FOMC move wiped out. Yeah, it's all just undoing. Difficult to pick a direction on this. I'm not going to push this today. This is going to stop out this one, so I'm going to stop. I'm not going to try and get clever. I don't want to long this up here. So there's your, if you are taking the 15-minute ORB, you're long now. Stop under the low. That isn't really a propulsion gap. We didn't break the high. Tricky today. How do you do on the DAX this morning? I couldn't make it to the charts. Banked $2,000 off the DAX this morning. So that was my DAX trade. That was the pre-market 15. So the pre-market 15 and the 15 were pretty much the same thing today. So the 15, that the blue lines are the 15-minute pre-market open. The market opened there on that candle. Yep, so that's the 5-minute, 10-minute, 15. So that's your 15-minute opening range break. That's your pre-market 15 opening range break. That was your 5-minute opening range break. That was your 10-minute opening range break. So the pre-market, the 5 and the 10 were all the same level. The 15 was slightly higher, but it doesn't matter, does it? I got on there and I got off here. Yeah, lovely one today. Kind of hoping the Nasdaq was going to do the same thing, and it's actually the Dow that's done it, which is weird. I don't know. I was expecting the Dow, the Nasdaq to go today because it's tech stock day, but apparently not. We will see. What's that euro doing? Okay, so we've got a bit of retracement starting on the euro. So if you are interested in these euros, 5-minute reversal alerts are going to be not far away. Has she finished yet? Yeah. Right. She's finished. Okay. So now she's finished. Now the market can actually do what it should be doing, which is pumping. Don't mind. So Euro odd, we've had the reversal alert. Euro CAD, not quite. Euro Swiss, miles away because it's just too high. Too big a drop, too fast. Euro pound is just above ADR. Euro yen, same thing. Euro New Zealand, oh, look at that. Missed it by a pip. So Euro New Zealand just about to get one in a minute. And Euro US dollars miles away. But the US dollar is obviously pumping at the moment, so be a bit careful with that one. Nasdaq's reversing. Dow, oops, wrong one. Dow is holding up. This is a really tricky open today. It's speed. I haven't seen the Dow do that for ages. Not with that much. So someone was selling a lot of Dow stock, and there's only 30 in there. So what were they selling? Who did we have yesterday? Oh, wrong one. Meta and Novo. Not sure why that's selling off so hard today. United Health, Amgen. I mean, nothing's really selling off, is it? Look, particularly there. Just huge divergence across the board. The Dow, for some reason, is just selling off super fast. I don't know why. It's a weird one. Anyway, so what happens with that? Stopped out on the S&P at break even. Small win on the Nas. That'll do. A win's a win. Still have a sell order in on the Nas. Yeah, I'm not convinced by that at all. Not after that, and not after the S&P as well. The S&P is doing the same thing. Something's holding the Nasdaq up at the moment. So either the S&P and the Dow are going to fly with the Nas, in which case I'm the wrong way, or the Nasdaq for some reason is going to just come down super hard when these do. But at the moment, we've got buyers stepping in on both of these. So volatile as you like, isn't it? Not good. So yeah, there's your ADRs. We've got gold just hit ADR as well, obviously, with the US dollars massively pumping. Again, this is all evidence. Gold will do the same thing as the indices. Yeah, that's what should be happening to the stock indices. Not. So we've got some weird divergence going on, but the trouble with divergence is you don't know which way. So gold, you've got an opportunity for a buy there. So looking at the sentiment on gold, it's still a buy at the moment. 80% of the market participants are short on this. So you want to be looking for long opportunities. You're not going to get a reversal on this because it's coming down so hard. But look for levels. We're back down. We've completely returned to origin on the US dollar FOMC move. So looking for areas below. That's 125 ADR. Dollars off the charts, isn't it? Nice moves. Did anybody get on the mean reversions on the dollar pairs this morning when we looked at them all this morning as potential fades? I didn't take any of them, but did anybody get on them? If you did, you've made a good profit today. The dog alarm's going off. How dare someone park outside the house? Dog does not allow that. Nasdaq's just made a lower low and a lower high. Let's see if we can get another lower low. The Dow has stopped pushing. S&P, I assume, done the same. Yeah. So if we get a new low on the S&P and a new low on the Dow, I would expect now the Nasdaq to go right. Yeah, sorry, I forgot. I was meant to be short, and then collapse. We need these two guys to step in there and help it on its way. Tricky one. This is the trouble with when you've had an instrument that's done this. So this is the Globex session. I can't actually see. Where's my period separator? Oh, blimey, that is a big one, isn't it? Yes, all the way back there. So this is the Globex session. When you had such a strong move in the Globex session, the market is a little bit out of money by the time it gets up here. So it's a little bit exhausted. New lows going in on the NAS. There we go. So we just got another low. Not getting any follow through now on the S&P or the Dow. S&P's made new lows on the session. Dow is holding up. Oh, confusion today, isn't it? I hate days like this. Franco, yes, slammed it, 137 pips. What was that on the Dow? Nice one. You got about there. Well done. Well held. Well held. Or as you say, 2.16% of bankroll. Perfect. That's the way to look at it. Always measure your success in a percentage of your return. Oh, come on. Make your mind up, Mr. Euro. Not impressed with you at all today. Again, I'm not going to cover everything again today. Weeklies, euros and pounds and US dollars, obviously, it's all rate related. RSIs, it's all about the pound. So these are all extended massively to the downside, as I would expect them to be. You know, I've been shorting the pound for ages and I don't want to long it. So I'm not taking any of these RSI extensions long. You have got a possible opportunity for a mean reversion, but I'm not getting in anything pound mean reversion wise. I will be getting in up here short. So I'm not going to take any of these, but they're all very extended. You had a nice 125 ADR on the pound Swiss. I say you had a nice one. The trouble today, when you get these sorts of moves, and this is what I was saying kind of this morning, the market reverse alerts indicator is great for showing you market structure and for getting into trades in normal market conditions. When you have huge pushes based on fundamentals, the reversal obviously we're looking at the last bull move to find out where we need to break to get those bulls on side, and you can't do that when you've got such a huge sell-off in one direction. It just doesn't happen. So we're just about to get a reversal alert on the Nasdaq as well on M5. So we're just about to get the structure broken. I am in short twice now because I'm adding. I've got the EA set to add to winners. There's your reversal alert. So yeah, all these RSIs that are massively extended are mostly pound-based. Oil as well. Just having a quick look at oil. I'm long oil at the moment. We're not quite getting where I want to be on oil. We've gone a bit deeper. So this is the propulsion gap that started this rally, which lasted over a week. Yeah. So I'm hoping we're going to find some buyers down here. We've still got, this is the low. Yeah. So as long as this low isn't invalidated, we've still got potential bullish market structure. It's just coming a lot deeper than I was expecting it to. So oil, I will be looking to add a position onto oil. I've only got one on at the moment. I haven't got the EA running on this. I'm managing this one manually. So we're 128. So yeah, somewhere around here, I'm actually going to get in long again, second position. So we're just about to put a new low in. So the market reversal alert will go in on that candle there. So I will pending that. So I'm going to get in another oil. Actually, we haven't put a low in there, have we? Just going to move that up a little bit. Yeah, so take another oil. The only other thing we got, yeah, euro pound. So the only other thing that is extended but not related to the euros or the pounds are CAD yen. So that is extended on the. I've just hedged myself. Hang on a minute. This is what happens when you try to run two strategies at the same time. So I'm hedged now on the 15-minute retest, on the pre-15-minute retest. I don't know what I want to do now. This is a horrible, horrible session. I don't really know what to do now with this one. God, it's whippy today, isn't it? I'm just watching the Dow. Coming back into sync a little bit now. The reason I'm watching the Dow is because we've just found all the buyers back in this propulsion gap. So I'm just wondering if this is actually the NASDAQ in control. It's very difficult to sell at the moment. It's very whippy, very whippy. Yeah, I'm just going to break even the shorts. So that short I've just broke even. If we do push out above here, I'll get out of that one and take a loss on those two. This thing's got no idea. Okay, so I'm out of my buys. Back short again. €175 US dollar. So we've still got a very strong US dollar, which would indicate again still short here. The Dow's just turning as well. So a tricky session. Not as tricky as yesterday. Dow has some potential to explode higher here. Yeah, it could go either way. That's stating the obvious. It's always got potential to explode higher and lower. I can guarantee one of two things is going to happen. Franco, yeah. Euro, pound, 3 positions, 137 pips. Good job. This is whippy today. Very whippy. Need to have fairly wide stops today. Too volatile. This means you've got to put less risk on the table, basically. But so stopped out break even on that position, which is fine if we're pushing higher. Too tight. Sorry, wrong one. Shall I leave that at 300? No, I won't. Leave it at 500. Okay. Yeah, so I'm not going to cover everything again. Sentiment-wise, there's not a massive change in the sentiment today. Top retail moves basically Euro CAD long, Euro pound long. So again, the market is all short. Yeah, so everybody's nicely in profit, adding onto their positions now on those shorts. So that will either drop because they're getting out of those shorts, or we're going to get that Euro pop. Look at this again. Schizophrenic, this thing today. Absolutely no idea which way this thing's going today. Nothing's giving any clues whatsoever. This is not the day to be trading. I don't want to give all this profit back today. So yeah, all these euro pairs basically just not getting any traction at the minute. We are starting to pull back now. I will get onto another euro pound long. Euro CAD I'm not going to be able to get onto a second, but that's fine. Euro Swiss got no chance. Aussie, New Zealand dollar, US dollar, ADR. Again, so another US dollars absolutely steaming. Look at that. So this NASDAQ should be coming down. It's holding up really well. I don't know why. People are buying up stocks. Pound US dollar, 150 ADR. We don't want to get in front of this US dollar today, do we? Short NAS, Astra Altro stopped out. It's too whippy. It's too whippy today. You got days like this. What you really want to do, and you have to fight it. But what you really need to do is to be jumping up onto M15 and looking at these as your ranges. So getting short here, stop above last candle high. Obviously, the ability to make money with wide stops when you're scalping is hard, but you also will get chopped to pieces if you keep trying to jump in and out. So kind of need to go to a slightly higher time frame and just measure these moves. Look, 15-minute candles are 50 points at the moment. Might get hedged again. If it does go, though, I mean, if it does go, I do actually want to be on it. Just with the strength of this US dollar at the moment, I can't see how it's going to get any legs to get higher. All the other indices are coming down. I'm going to take these buy stops off. I just don't want to get triggered on them long. I just don't think we're going long on the NAS. All the evidence with the US dollar, with the other indices, is pointing south. This thing's just holding up for some reason at the moment. Whoever's buying up, whatever they're buying up in the NAS at the moment, is going to run out of people willing to sell to them, and they're going to stop buying. And as soon as they stop buying, if we've still got that momentum on the US dollar, this thing's going to come crumbling down pretty fast. But somebody's holding this up a minute. It's a lot of buy orders going in there. I'd love to hear Tech Strike at the moment. Oh, let's listen to Tech Strike. Might have to refresh that. See, sells, nothing but sells at the minute. More sells. Dow is just trying to make new low of the day. We'll probably get a pop out the lows here. Watch for a quick flush. Basically, all these guys long here are going to puke at that low, which will flurry the orders to the downside if we get it. Watch for a pop. Euro US dollar shoehorn on the 1 hour. I've no idea what a shoehorn is, Franco. Euro US dollar shoehorn on the 1 hour. I've been around a long time and I've never heard the term shoehorn. What's a shoehorn? You're going to have to explain that one. Someone's put the brakes on. Buyers are coming in now. So they're buying up the lows. S&P buying up the lows. That's a Bart Simpson pattern, a shoehorn. Look at it. Yeah, I was looking at it. I'm looking at it. Like, Euro US dollar, 1 hour. What's a shoehorn? I can't see a shoehorn. I literally never heard of it. I have no idea what a shoehorn is. I would call that what's called an A-shaped recovery. The technical term in the banking sector is an A-shaped and a V-shaped recovery. That's what the banks use. I have no idea. But I guess a shoehorn, I suppose, is like instead of an angry A, it's a slightly less angry A-shaped recovery. Is that what you mean? I don't know. For those that don't know what a shoehorn is, that might be young, it's one of those. You use them to put your shoes on when you're really old. Yeah, there you go. There's a shoehorn. So if you look at that and then think what the Euro US dollar is doing, I think that's what we're talking about. Just buying up the lows. NAS is there's the buyers. Here they come. Damn it. No horsefoot. Okay, Kansas City shoehorn. No horsefoot. You've lost me. I don't know what we're talking about. Ladies' high heels. Yeah. Yeah, everybody uses shoehorns. I don't wear shoes. I think shoehorns are a bit of an old-fashioned thing because when you had hard leather shoes, like you wear to work or something, like they're quite tough, and you need a shoehorn to get your foot in without scraping your heel off. I don't wear anything but trainers and comfortable shoes, so I don't have a problem with shoe. We don't own a shoehorn in this house anymore. My wife never wears high heels, so we don't do shoehorns. It's never a trading term I've heard either. I'm going to make a new course, Frank's shoehorn strategy. That will be our textbook. That will be our textbook pattern. Yeah, I love drawing patterns on charts. It's always good fun. Sounded like there's some buyers coming in, but they do not seem to be able to get anywhere. We have bought the lows up, but we haven't actually got anywhere. So we're still looking at this entry for a puke out the lows. No traction. Nasdaq's not playing ball. So we are now. There's some more buyers coming in. We're now 20 minutes sideways. And my charts are frozen. My charts are frozen just as I'm getting a load of buying signals. The hell? Okay, this is my Forex factory. All my terminals are frozen. That's the first time I've had platform freeze on my Forex funds. My live accounts also frozen. Let me just refresh servers. Rescan. There we go. Oh, Jesus, that's moved. I'm just going to rescan the servers. There we go. That's popped. I'm out. I'm out one short. Closing that second. There's no point. I don't want to be in that. Blimey, what a session. How do you control drawdown in the EA? Drawdown control basically is all done. It's all covered in the manual and covered in the video, but it's these settings here. Partial profits and drawdown control. So if you enable drawdown control, you can enable it either per trade or per basket. And literally you just say the drawdown amount, or that's amount in money, amount in pips, or a percentage drawdown of ADR. And then you say, I want to close out 30% of my trades when I hit these levels. It's all covered in the manual, though. Go and read the manual. But you can do drawdown control either on a trade-by-trade basis. So if you were to say use ADR and you've got a trade and it moves one ADR against you, you could say, I want you to close 30% of that position at that point. If you do it on a basket basis, let's say you've got a trade here, a trade here, and a trade here. When the total sum of those three moves one ADR behind, so obviously it would be a closer distance to one trade, you can close out 30% or 50% or whatever you set. So the EA will just basically shut a percentage of the position out, or positions. So a lot of buying coming in. Conspiracies, they know, Lee, you're in revenge mode. I'm not in revenge mode. No, I will take what I take today. Get what I get. I'm not pushing it. Like I said to somebody in Telegram earlier, if you revenge trade, you will lose over and over and over again. You know, I think they said something like, I hate getting whipsawed out. I want to break my computer. If you feel like that, you are just going to go, screw you, market. I'm coming in here. I'm going 1% short. Bang. Because you owe me my money back. If you do that, as soon as you start doing that, you're dead. Because this thing doesn't give a monkey's whether you're going 1%, 0.5%, 10%, whatever. It will go where it's going. And if it goes the wrong way the day that you press that 1% button, that's it. You're out. You cannot run a business without capital. Your trading account is your capital. You lose your capital, you lose your business. Capital preservation, rule number 1. My dog's head is sideways at the moment, Brian. That's a signal. Yeah. Is it listening to the tick strike? What's that noise? I'll turn tick strike off. I want to confuse your dog. Let him trade. Yes, we do. Turn tick strike on. Every time your dog turns his head, hit the button. Whichever way it's ticking, hit the button. It might work. You've got as much chance of working as anything at the moment. That this is just a nasty session. It's one of those days where they go like, if you missed that, sorry, now you're dead. It's one of those, isn't it? So there's the open. So there's your 15-minute opening range high and low. Literally all we're doing is we are rotating within the 15-minute ORB at the moment. So whip, whip, whip. Thank you. Last question. Which manual series video covers the drawdown control? So if you go to the website and go to the EA page, Market Reversal Alerts EA, there's a video, this one, Market Reversal Alerts EA settings. It's 2 hours long, 2.5 hours long. It's a very big, complicated, powerful EA. So I go through every setting in that video in detail. But there is also the manual. Whoa, shush. There's also the manual there. So the manual goes through setting by setting. So if you just want to know about one setting in the manual, in the EA, like drawdown control, for example, if you just get back down to the drawdown control section, probably the easiest thing to do is go Control F, drawdown. Okay. Let's do control. Okay, partial problem drawdown control. So this, from this point on the page, obviously just talks about the drawdown control settings, each one, what they do, how they work. So you just read that specific part. How do you interpret COT? And your fundamental is amazing. Trying to pick up on it. So COT basically is the long-term view of the market. So basically, there's in the COT there's 3 specific types of futures traders. So basically, everybody that places a trade on the futures markets through the Chicago Mercantile Exchange, which is everybody that has, if you can't trade the futures market without going through the CME, basically. So the CME log every person that places a trade, and they log every transaction, every position that is entered into and closed. So there is a full log and accountability for everything that happens on the futures market. The CME report that information, and they categorize traders on the futures market into 3 sections. You've got commercials, non-commercials, and others, basically. But we are not interested in the commercials. The commercials are anybody that places a trade for a commercial transaction reason, which includes hedge funds, pension funds, large institutions, banks that are placing trades on behalf of their customers, or they are placing trades for long-term speculation, if you like, right? But they're mainly they're hedges. These are the proper trades, commercial. So we don't want to know about them, because it doesn't matter if a hedge fund is placing a long on the US dollar. It doesn't matter whether the US dollar goes up or down. The reason the hedge fund has placed the trade is for the hedge reason. So they have a customer where if the US dollar drops, they make money. So the customer places a hedge trade with the hedge fund in the opposite direction, so that if the US dollar goes up or down, they make a zero sum. Yeah. So hedge funds, we don't need to know about. We don't care about hedge funds. The non-commercials and the others is us. We're rubbish. Ignore us. We're small as well. Doesn't make any difference what we do. The non-commercials are the traders that trade on the futures markets for speculative gain. So these are banks and institutional players that are entering the market with the sole purpose of making it go in a direction to profit from it. Not making it go in a direction, wanting it to go in a direction to make profit from it. So these are the guys that have usually good information from their company, institution, whatever, that there is going to be a directional move on an instrument. This is what's reported here, the non-commercials. So the non-commercial positioning on the euro for the moment is 70% of the market is longing it, meaning that if the market goes up, these banks and institutions will make money. Banks and institutions have enough in their pot to move the market in a direction. So if they can move the market in a direction and they are going that way, the likelihood is over a period of 4 to 12 weeks, that's the way the market will go. Yeah. But these are long-term speculative non-commercial positions. So you will find COT changes over time. So if you look at historical data on the Commitment of Traders report, you will find that it fluctuates, but it won't fluctuate much. It goes up and down a bit. So this is going back, you're looking at a year here. So in the last year on, for example, that's a bad one because it's fairly neutral, but US dollar Swiss for the last year has been a long. Yeah. So for 12 months, the market has been overall in general long on the US dollar Swiss. So you would expect the US dollar Swiss to go up. I don't know what the US dollar Swiss has done in the last year. There you go. So that's 2022 from there to 2023, roughly here. Yeah. Yeah. So the market was long all year on US dollar Swiss. All year, US dollar Swiss went up. But you can see this is a daily chart, right? So the COT is a long term. In that year, you're going to have times when it's going to go down against you for days and weeks on end. Yeah, these are long-term speculators. They're getting in the market for anything from a month to a quarter. They report their profits to their shareholders on a monthly and a quarterly basis. This is what these moving averages are. So these moving averages represent COT positioning, historical. Yeah. So this is the 24 and the 72, which represents 24 trading days and 72 trading days, 1 month, 1 quarter. So that's basically how you interpret it. So I use COT as a filter on the directional buyer scorecard to tell us what direction the big boys are in. So when we look at the strong buys and sells, yeah, here, for example, on the US dollar yen, the big boys are short the yen and long the US dollar. So therefore, we give that a +4. We give it a +2 for being long the US dollar, and we give it a +2 because we are short the yen. So we are long that, short that, which gives us a bias of a buy, +4. Combine that with retail sentiment. When the retail guys are all going short, going down here, and we know that the big boys are all going that way, yeah, these guys get it wrong most of the time, retail. So what that tells us is if they're going short on the market and the market is going short with them, all their liquidity is sitting up at the highs. When the market needs to move itself in the direction it wants to go, it will come and find that liquidity. So when you've got a +2 there, i.e. a 6, like in that case, that gives us a good idea that at some point soon the market is going to pump. If you also have all the fundamentals on your side, you get a much higher score. So like the pound US dollar is a -8. It's a -8 because we've got COT positioning short, i.e. they are short the pound, long the US dollar, gives us a -4. We also have interest rates. The pound is not doing as well with interest rates. Inflation, we're not doing as well with inflation. GDP, we're not doing as well with GDP. Unemployment is higher here than it is in the US. This is all negative for the pound and all positive for the US. So we get a bigger score, which says you want to be doing nothing but shorting the pound US dollar. Yeah. So it's an overall top down, high as you like, looking up from 35,000 foot view of the market. You will get times when it's going to go against you. But overall, if something, and this is why I, as a position trader, damn, it's gone. Should have stayed in those longs. Never mind. As a position trader, I'm interested in where I should be going over a period of days and weeks. So as long as I've got everything on side, if the market's going against me, it gives me the confidence that I'm on the side with the big boys. I'm against the retail guys and all the fundamentals are pointing that way. That's how I use COT and everything fundamental, which is why all these sections exist. But, if you've got everything pointing in your direction and you get, like, say, for example, we should be shorting the pound US dollar, yeah? So when we should be short the pound US dollar, all I'm interested in is shorting. So what do? Every time we get a push, I short it. So I short it there, 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 and I short it there. Yeah. So that short came down, that short came down, that short came down a little bit, pushed up again, would have taken a second, come out, that one. Pushed up, pulled down, didn't go anywhere for a few days, then came down, pushed up, pulled down. Yeah, I'm not interested in that. Not taking that, not taking that, not taking that. I'm not taking that. Because the fundamentals are saying there's going to be more downward pressure, because the big boys are the ones that move the market. The big boys are the ones that are making that happen. Climb up the stairs, fall down the elevator shaft. I'm going to fall down the elevator shaft with the big boys. If the big boys are looking to do that and we're climbing, I know that that's because it's just a pullback in the next move that they will form at some point. That's how the fundamentals help you. But we're short on this for over a week. This thing went up. For over a week, this thing went sideways. But during that sideways, you had lots of opportunities to get in. The higher the time frame you go, the less opportunities you get. Short, 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 short. Maybe short. Yeah. So getting in, if I didn't get out there, I got in there on the second peak and got out there because I got in once there, got in once there, got out there, profit. Got in here. If I didn't get out there, I would have got in there and got out there. And there I'm in. I'm still in. Might be out now. Don't know. But, you know, positions, this is the whole purpose of position trading. You get in line with where you think it's going, and you get out. If you use a stop loss, if you get in, use a stop, you'll get out, but you won't get out with a profit. What you should be doing is every time you look like you're going to get stopped out, you should be adding a position. Because if you've got stopped out, it means the market's moved really hard and fast against you. You sell when the market's moving up. You buy when the market's moving down. If you buy when the market's moving up, you've missed the move. This is what the RSI tells you. The market has moved up fast and hard. What's going to happen next? They're going to take profit. NASDAQ. Right, so NASDAQ, we're at ADR now. This thing's on a mission, isn't it? Look. I still want to short this. I don't really want to short this, though, now. I just want to short the Dow. Okay, we've got some traction on the euro. The US dollar's having a bit of a rest, which is why we're seeing the Dow Jones moving up. S&P, look at the S&P. These things today are just all over the place. Look, it's just a confusing session today. So if you haven't looked at any of the others, you'll be fine. But if you're looking at all these markets as a whole, paralysis by analysis today, isn't it? Thank you for your instruction, breaking things down, helping me get my dog, my dog, get out of my fog. It's a complicated thing. It's all a very, very complicated thing. And this is why people don't pay attention to fundamentals. It's too complicated. Like I said this morning, people want an arrow on a chart that makes them £1 million. But this is what actually drives the market. This is what the market uses. So banks and institutions use exactly this method for forecasting price movement, except they use a much bigger scorecard with more fundamentals. This is a really dumbed down version of what the banks use. They scorecard things with plus and minuses dependent on how they relate to each individual currency, and they will give a weighting. So I give a bigger weighting to COT and I give a bigger weighting to retail than I do the rest. But they will use M2 money supply. They will use building permits. They will use the PMI figures. There'll be all sorts of stuff that the banks will use. Their scorecards will be 30 to 40 different things, which will all have individual weightings. But those weightings at the end of the day will come out with either a plus or a minus. And the strength of that plus or minus will tell the institution whether or not they should be selling or buying futures. Yeah, so if we follow what the big banks are doing in the futures market, which is a result of their scorecarding system, and add that to our own, we don't need to know all of this crap, do we? Follow the big money. The big money's doing that. But as it says here, this is not a timing tool. You cannot use this to time the market. This gives you a top-down 35,000 foot view. You need to find a way to get in with these guys, which is, for me, 4 hour and hourly RSI extension. Yeah. Short it. Look at FOMC, look. In the grand scheme of things, where we are today with all this movement, we're not, you know, we're not anywhere yet, are we? Look at all this we've had today. Look at that 2% gain made by somebody there today. In the grand scheme of things, flies we are. We don't even come into the equation. Just going to quick look at these euros. So we are pulling back a little bit on the euros. Well, they've stopped moving down anyway, put it that way. So we've had a good hour of sideways at the moment. So I will look to get into some more of these. Oil is lovely reversal. So I'm long one again on oil. Again, from position trading, yeah, this is demonstrates the point of position trading. That was my entry up here, remember? Here. By adding into this position on that that reversal alert, I've now brought my average for this trade down to that level. So for me to get out of this trade now, yeah. So if you were entering this trade yesterday, let's go down to 5 minutes. Easier to explain, isn't it? So if you got in with me yesterday on that trade there, you would have put your stop loss there if you were using a stop loss. Yeah. So all that would have happened today is you would have stopped out in the position and made a loss. What I've done is averaged into the position to give myself a really easy out. So I can get out of this trade with no loss at all. And all I need is one candle. 42 pip move on something that moves 257 pips a day. So this is less than a quarter its normal daily movement I need just to get out with average, with no win, no loss. This is how the banks run their futures desks. They don't get into the futures market and then get out of the futures market because they got it wrong. They get into the futures market with a directional bias and they scale into that move. And then they scale out of that move, and they scale into that move, and they scale out of that move. And that's why the market moves like it does. So if you start trading in the same way as they're doing it by scaling in and out, you suddenly eliminate loss. You eliminate the psychology of getting angry because you got stopped out 10 times in a row. That disappears. Your losses disappear. And all that happens is you make small gains regularly, the way the banks do. But to know that, you've got to have some way of saying, I need to get in this direction. So you can either use the institution. What? I think I might have accidentally tried to move a position there, didn't I? What was I going to say? Yeah, so you can use the moving averages. Oil's not a good example, but for a directional bias, Euro US dollar is a great example of a trend. Yeah, you use the moving averages as your. This has been trending beautifully for over a year now. So we trended down. So you know, if we're below, the moving averages are red. You do nothing but take RSI extensions to the upside. Every single time you do that, you will win money, guaranteed, regardless. If you don't use a stop loss and all you do is you hit the sell button every time you do that, at some point you will get out. If you get in there and you get out there, it doesn't matter where you get out, does it? You make money. What you have got to do, stop doing, is getting in, putting a stop loss, getting stopped out, getting in again. Because all you're doing is you're just losing all of that. If you have a strike rate of 50% and you're making zero return, if you eliminate all of your stops and don't get stopped out, your strike rate will go up to 100%. It's really that easy. But you need to obviously do drawdown control. It's not going to go up to 100%. My strike rate is not 100%. It's something like 82. So, yeah. Actually, it'd be interesting to see what my strike rate was, wouldn't it, on the quant analyzer. If I eliminate all the NASDAQ trades, because all the NASDAQ and the Dow and the DAX trades actually used a stop loss. So if I eliminate all of those, it'd be interesting to see what it was when I pass the evaluation. Portfolio. How do you eliminate? Can I delete those? So I've never tried to delete anything in here. Can you delete trades? You can't, can you? Choose view, special. Don't know what that is. Can you filter? I don't know. I haven't used this to try and do anything but just literally look at my. There you go. So my Aussie dollar CAD strike rate, 100%. Aussie dollar yen strike rate, 100%. Aussie New Zealand strike rate, 100%. CAD Swiss, 100%. Swiss yen, 100%. Euro CAD, 100%. Euro Swiss, 89%. Why? Because I did some drawdown control. Euro Swiss went a little bit too far, so I took a little bit off on a Tuesday after holding it for 22 hours. Yeah. But that's what happens to your strike rate. Euro pound, 100%. Euro yen, 100%. Euro New Zealand, 100%. You get the message. Pound New Zealand. Pound US, 100%. Right. Scalping. Let's look at New Zealand dollar CAD, 100%. New Zealand dollar yen, 100%. New Zealand US, 100%. US dollar, yeah. Oil, 100%. Right. Scalping. Not quite as good. Actually, that's longs versus shorts. Where's my wins? Hang on, I'm looking at the wrong thing, aren't I? Hang on a minute. That's not strike rate. That's longs versus shorts. Where's strike rate? Wins, losses by month. There we go. That's better. Oh, well, that's not a pie chart. That's a pie chart. Yeah, it doesn't work as well. Look, there you go, 100%. So there's 100% in there. So Euro Swiss, I took a little bit of loss. So I won 6, lost 3. So that was a 50%. But you look at the DAX, win rate versus losing rate, and the NASDAQ. Look at the NASDAQ. I lost more trades on the NASDAQ than I did winners. I still came out with a net positive result because I've got a positive RR. But you look at all the others. Yeah, this is drawdown control. This is just me scaling out of partials. So that's not 100% strike rate because I'm taking partial. Some of them are, but and don't forget as well, when I'm scaling out, right? So there's 5 positions here. Yeah. So if the market moves up, right, and I'm going short, I'll take a position, 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 position. So let's take these 5 positions here. When the market comes down, when I close my entire portfolio here, that's profit, that's profit, that's profit, that's profit. That's loss. But is it? Not really, is it? The whole thing is a position, is a profit. And that's why I call it position trading. And that's why it's called position trading, because you are trading a position in the market, not a trade. And don't do an individual trade. It's lovely getting into the market and then it just goes down and you go, thank you very much. But that's not really real life. So what I mean by getting 100% strike rate, which it can't actually show in here because you can't filter it by grouped trades that actually were profitable, but that is 100% strike rate as far as I'm concerned. If I took 5 trades and I closed it here, yeah, my average is there. I class that as 100% profit because I've taken one trade, split into 5 positions, and I've taken a profit on it. So it's 100% strike rate as far as I'm concerned. It's just a different way of looking at the market, isn't it? That's filtered. Anywho, you know what I mean. Right, I'm not going to trade anymore because I've missed the ORB today was there. Sorry, the ORB today was there. That was your ORB long, but you would have got taken out on an ORB short there. So you would have gone short, stopped out, long, still in it. So overall, it's going to be a profitable one today, but it's gone too far. I'm not chasing that up there. And I don't fancy the others. Dow's just retesting in the propulsion gap, but I can't short that while this thing's doing that. So difficult today. One thing I wanted to ask about MT4, how do you set up your market watch to where all you have to do is click the pair to show the chart window? I have to click and drag. Yeah, so do I. I'm doing the same, David. Does it look like I'm just clicking on this to make it change? I'm not. Look, I click on it, nothing happens. What I'm doing is that. I'm doing it so fast. What I'm doing is this. I'll do it in slow motion. Ready? I'm moving to the market watch. I click, drag, and drop and keep my mouse moving. So it looks like what I'm doing is just clicking, but what I'm actually doing is clicking and dragging. You're just not seeing it because I'm super fast and nimble. I'm going like that. Look. Bang, bang. What I'm actually doing is click, drag, let go. Click, drag, let go. You can't do that. I'm just too quick. I'm just too fast for you. That's what I'm doing. I can understand. You know, that's why. You're not the first person to ask me that question. And I've answered people in Telegram and said, you can't do that. And they've said, but you do it all the time. But no, I don't. I click and drag. And I'm thinking, what? Now I understand why. Because I just go to quick. Sometimes I miss it. I missed it there. Sometimes because what I'm trying to do is grab it and drop it so close to the edge. Sometimes I miss. And that's why sometimes you'll see a chart open. If I do that, bang, it opens here, look, see? So every now and again, you'll see me do that and it'll open a chart and I'll go, oh, for God's sake. And I'll shut it and then I'll do that and it will change. The reason being is because I'm dragging it and dropping it and I'm not actually making it to the chart. I'm getting to the edge here. When you drop it on the edge there, it opens a new one because I'm just too fast. Missed it. Oh no. See, MT4 can't even keep up with me. There you go. Ninja. MT4 Ninja. Exactly. Afternoon, Profster. One thing I did learn well is the concept of scaling in. Has changed everything, winning. And that's it. Scale in. You know, I look at my P&L here, right? I'm not worried about that. Because when you look at it, forget the money. Look at the percentage. I'm 1%, right? So again, I say this so much in the live room. Yeah, you're taught to trade as a trader. You're taught to take a risk. You're taught to take 1% risk on your trades. So you get in, you risk 1% of your account with a stop loss. When that goes against you, you lose 1% of your account. I'm sitting in 1% of drawdown now. I've lost nothing. And that is the key game changer. I have lost nothing, right? New Zealand dollar CAD is now just coming back into profit. I am long. Okay, I got in long somewhere over here. Yeah. Everybody else that got in long today is dead. They're out. They've stopped out with 1% of their account. So I don't know where I got in. Let's say I got in probably here. No, I didn't. I got in here, didn't I? So that one there. So I got in a reversal alert there, long, pop. Everybody's put their stop there. If they're feeling really, really brave, they've put it there or there. They're still dead. They're all dead, right? They've lost 1% of their account. So let's say it moved down to here and they've gone long again. Yeah. Oh, it's come back to where I got. I was right. I told you I was right. It's long. So they got in again. Where's their stop? Right. So they've lost 1% of their account. I'm in the same trade as then, and I've lost absolutely nothing. That is the game changer. That's the bit that when people are watching the bootcamp, they go, ah. And if this continues to push down, so let's take euro pound. I'm in long on the euro pound. There's a beautiful W pattern on the M5. Look, just about to get reversal alert. W pattern reversal. So I'm long on this now, right? This is textbook. This is the best lesson. I'm going to clip this. Well, you clip this. Where are we? Look at the time. Oh, shut up. Aussie dollar New Zealand ADR. Everybody in London went long. The news came out. They came down. They took all their liquidity. Pushed back up again. Enticed everybody to go long. Everybody that went long from that candle onwards put their stop there. They're all dead, right? I've got into euro pound twice today long. I've lost 2% of my account, and now I'm thinking about getting in a third time. Yeah, I'm long on this because everybody's short on this, and all their liquidity is actually sitting up there. So they're right to be getting in long. The market's just not ready to go yet. But look at that. Long liquidity, stop run, long liquidity, stop run, long, stop, run, including spread. If you're sitting down there with your stop, you're dead. Where the liquidity is. Buy limits triggering. But euro pound, yeah. So I'm in here. If I get in here now, what happens is that average price drops to there. So for me to get out of this position after I take a long here, which I'm not sure if I'm going to, but 36. Yeah, I'm going to take a long. So I'm going to take a second position in a second on this. My average is going to drop when I get into that position. My average is going to drop to there. So all I need now is a move of 16 pips on something that moves 57 pips a day. That's all I need to get out of this position and go, oh, don't like it anymore. I get out with zero loss. And if it continues to go down, I will continue to do that. And I will just bring this average price down with me, because as long as the market moves, the market is going to do what? Go up and go down. As long as this thing just keeps doing what it does every day, and it has done for the last 100 years, which is go up and go down, I will have an opportunity to get out of my positions. So where I am now on the big picture, long here, if I get in now here and it continues to come down to here, and then it continues to come down to here, this thing's going to be super extended down there, and it's going to do what? Pull back. When it does that, I'm out. Because everybody with me right now, all the market participants that are long are doing exactly the same thing. They're scaling into a position long term because the euro is bullish and the pound is bearish. But retail are just the wrong way. So they will continue to go and grab the liquidity as long as they need to grab it. As soon as they need to make a move, that's where the lion's share is. We know it's all up there because retail is all short. So we know their liquidity pool is sitting at the top. Euro pound, 91% of market participants now are short on this. They're all sitting here rubbing their hands now going, hee, look at the amount of money we've got. Our stops are up there. oh, okay, what I'm going to do is move my stop now to break even. What do you think this is going to do? Try and grab that break even stop. And then it's going to push back down again. And they're going to go, oh, they're going to enter again. But this time they're going to enter with their stop back where it was before. That is where your market structure shifts. They're dead. It's a trap. It's always a trap. Everything's a trap. Every time you see the market moving one way, it's a trap. That's why everybody in retail says, why is it every time I hit the buy button, it goes the other way? Because you are using an indicator that lags the market. So by the time you get the signal to go long, golden cross, somebody posted I can use the H4 to explain this, but somebody posted a video today. There's a trader out there called the Transparent Trader. No idea. I've never heard of him before. He suddenly came from nowhere, but posted something today on the golden cross. And this is a strategy I learned years ago, and it's part of what Steve Mallory used to teach BTMM, using the 50, 100, 200 moving average crosses. So this is what you call a golden cross, where you get a fast moving average crossing a slow moving average. That is the point where everybody goes long. Yeah. Sometimes it works, but most of the time it doesn't. Why? Because the move started here. So by the time you get your signal to go long, the market's already moved. This is a good example. There's the golden cross. There's the signal to go short. What happens afterwards? That. Why? Because the market's done that and now it's taking profit. Why is it every time I hit breakout traders? Why is it every time I get into a breakout, it goes the other way? Because it broke out from here. You missed it. All the liquidity is at the other end of the market now, so it needs to come back and grab that. Oil still looking like it's... Oh, no, we're pulling back. There you go. So break even, oil, yeah. I don't know if you were in the live room this morning with me, but I got into oil yesterday. Here. It pushed down today, so I've added. And now I'm back to break even. Haven't lost a penny. What should have happened yesterday was I should have lost 1% of my account in the London session, but I didn't. I added, and now I'm in profit. Because I'm not silly. Well, I'm not in profit, I'm break even. Anyway, I'll stop going on about that because I go on about that every day, just for the people that are new. I feel like a boxer now, not a victim. Exactly, Frank. You got the name for it as well. Franco Nico, Franco Bruno. That's exactly how you should feel. You know, it's the job is to make money, not to be right. I make money. I'm not right. I'm not right all the time at all. I'm wrong most of the time. Very, very rare. I come in here and I laugh every now and again. I come in here and this is green. I'm like, wow, don't see that very often, do you? Very rare to see that green. If that's green, it means I've got no risk on. Everything's working as I want it to. That's not right. I need to be in drawdown to be able to get this thing to a point where I can get the pop. But you know, nothing's in any danger yet at all. 1.5%, 2% on a prop account, then I'm starting to get a little twitchy, quite a bit twitchy actually, because you've only got 5% to play with. But Nasdaq's just hovering. Looks like we're shoehorning at the highs. So we're rolling over. So we put in an indecision bar, spinning top, followed by a lower low, a lower low, a lower high, a lower high. Sorry, lower low, lower low, lower high, lower high. So market structure is shifting to the downside. Haven't got a break of structure yet though, but it's looking like it's starting to weaken. Sebastian, this morning you were in profit with euro pound about $260. Did you close it? Yeah, in London. So euro pound, I closed out there. So took a reversal alert there and closed it there. Basically, there's the news, look. So I basically closed it before the news. So what I actually did, I didn't close it manually. I put a trailer on it. I put a 100 pip trailer on it. So you'll probably find that's 100 pips. I think it was 100. Yeah, there you go, 100. So I put a 100 pip trailer on it. and then it stopped me out just before the news. So the idea of the trailer is, if it's going to go mental and fly, just take me with you. If it's not going to go mental and fly, get me out. So it got me out with just over 0.25%. And then we pushed down, pushed back up. So I got in again. Because this is a sentiment trade. Euro pound. 91% of the market is the wrong way on this. COT is long. Retail is short. So I want to be doing that because they're going to head up here at some point. I don't know when, but so yeah, I took that one off this morning. Equal lows. Is it dangerous? I'm waiting for a retest on oil on M5 for a long. I don't know what you mean by equal lows there. You're talking about that? Yeah, I mean, you got the reversal alert off of, I mean, there's not really equal lows there. It's uneven on my chart anyway. But nothing's dangerous if you're not, unless you're using a stop loss. If you're using a stop loss, everything's dangerous, isn't it? I never ever ask myself the question, is this trade dangerous? I get into the market. Euro pound. Yeah, no, that's good entry. Double bottom, equal lows. But yeah, I mean, if you're going to use a stop loss, yes, this is very dangerous. Why? Because what have they just done? If you look at this, yeah, this is we were talking about this, weren't we? So liquidity, run, long, liquidity, run, long, liquidity, double bottom, extra liquidity, double bubble, yum, then go. But the question always, which we will never have the answer to, is, has the market got enough liquidity now to start its move? Or does it need more? If it needs more, it will go there. If it doesn't need more, it will move. We never know. It will keep grabbing liquidity until it's had enough. Yeah, it will keep accumulating. Asia, it will keep accumulating until it's ready to move. Bang, and then it goes. Yeah, they build a book. It's all of video 1 in the bootcamp. They build a book. Their book has a bias. As soon as the book has a bias large enough to make the money, they move it in that direction. When they've moved it enough in that direction to take profit, they pull it back. Well, they don't pull it back. They just take profit. And the fact that they take profit means that it pulls back because they made that move happen. So now they make that move happen. Whether that is good or bad, you'll find out during the New York session. You can't tell. But what you've just said there, Profster, is exactly what you can eliminate as a position trader. Is it dangerous? I don't know. Don't care. I'm long. And I will get long again there. The next reversal alert. Right? One of two things is going to happen for me. This reversal alert didn't trigger. It pushed up through it, rejected it. So either we're going to get that and I'm going to enter a position there, or we're going to take that liquidity and I will get into a reversal alert down here somewhere. I don't care whether it's dangerous or not. There's no danger involved for me. I can't lose because I have no position in the market that will stop me out with a loss. The only way that this thing can hurt me, with a prop account, it can hurt me in other ways, but in normal position trading on my account, the only way this can hurt me is if it does that, and it keeps doing that for about 3 or 4 days on the trot and moves 2 to 3 ADR against me in one direction. That point, then I will say, right, yeah, all right, you can have that. You can have half of that position. You can have 20% of that position, and you can have 10% of that position. and I will bank all of that loss into my P&L. But I will not get out of that position because the fundamentals still point that way. But if I've got the timing of the position wrong, then yeah, I have to give some back, or I have to sit through it and sweat. But again, that's what I cover in the bootcamp, isn't it? At what point in your world does that become sweaty? For me, it's around about 15%. That's when I start sweating. Anything up to 10% is just a normal day in the bank for me. If I'm sitting in 10% of drawdown, it means I've got a good amount of risk on ready for when that move starts. And you've seen me in here, haven't you? Sitting in the morning in the London session in 7% of drawdown. In the afternoon, I've banked 4% and I'm sitting in 1.5% of drawdown. This is basically pies in the oven cooking. I'm just waiting for the banks to ping the oven. I don't know when they're going to ping it. They're going to ping it at some point, because if they don't ping it, they're not going to make any money. And if they don't make any money, I don't make any money. Look at that RSI extension. You just scaled into that move, you're out. You've done. Yeah, there's always ways to make money, but you just got to be careful with it. Don't get in too fast and too hard. Everybody knows that's been in position trading and been in this with me for a while. When you get in fast and hard, that's when you get hurt, when you get burnt. Shorted euro US dollar with the pullback. Gold, you mean? You've shorted it. You're obviously out then, aren't you? I guess. Have I ever had heavy drawdown with the system? Yeah, of course, every time, all the time. Wait, but what's heavy? What's heavy drawdown? I don't think I've had heavy drawdown. I'm up over $8,000 this month. I have been into drawdown of over 5% of my account. So, but that's not. I don't class that as heavy. What you know, heavy is relative, isn't it? It's relative to what you think. 30 to 40%. No. If your account gets to 30 to 40%, you haven't been doing drawdown control. You can't get to 30 to 40% without. You'd have to basically not be doing drawdown control, which is yeah. I mean, you can. I haven't. The EA has. Yeah, the market reversal alerts EA has. That's been in that sort of level of drawdown, unattended, but it's done 150% return. Again, it's all relative. This is why nobody in the world is ever going to agree on anything to do with trading, because it doesn't matter how many systems you look at, strategies you look at, how many EAs you show people. Everybody will have a different view on it. If I said to you right now, give me 30 grand, give me 20 grand, and in a year's time, I'll give you 45 grand back. Do you think that's a good deal? Most people would say, yeah, that's over 100% return. What if I said to you, give me 20 grand and I'll give you 45 grand back, but there is a 60% chance you'll lose that money? It's not so sweet now, is it? What will happen in the way that I trade is we may go into drawdown by 30 to 40% of our account. We won't lose any of it, but we will see some of it disappear and come back. If you're not watching it, I don't care. The market reversal alerts EA has been running on where's it been running? It's been running on a signal here. It's done 151% return. Yeah, looks amazing, doesn't it? 70% strike rate, 30% drawdown. Over 69 weeks, looks great. This is just running H1M5. it's taken drawdown of 48%. Why? Because it wasn't expecting a world war to start. Could I control that? No. Did I control it? Yes. So when this happened, I got out of my positions and took some loss on the euro because the euro's direction suddenly changed. The EA scaled into that move and then scaled out of it. Made a profit. Yeah. We've had other instances where we've taken drawdown. So it's gone into 40% drawdown. But I haven't looked at this. I don't watch it. Am I happy to get 150% return on my account for a 40% risk? Yeah. If you don't think it is, then this is not for you. Or you need to manage it manually. I can't answer the question. It's the same as when someone says, what's the strike rate? I don't know. I get in and I get out. Why am I worried about strike rate? My job is to make money. It's not to have a 45% or 70% strike rate. I'm not in it for the glory. I'm in it for the money. So that's what I like to see, a nice equity curve. Started with 20K. We're sitting on 40,600. So that's what's good, isn't it? Made 30 grand profit in that many weeks, 69 weeks. But that's running 100% automated, doing nothing, not touching it, and it's just returning. This is norm. This is the norm. This is what everybody's not wanting. Nobody wants to return this. Not interested. Everybody wants 50% a month. It's not going to happen. This is the real world. I do way better than the EA. That's what I say. I can't replicate myself. The EA will do somewhere between 5 to 10%. I will do somewhere between 10 to 25% a month. Typically 10 to 15. I outperform my EA because my EA cannot look at fundamentals. It cannot know that the Ukraine has just been invaded by Russia. It cannot know that the interest rates are about to change and that thing is probably going to spike for a couple of weeks. It doesn't know any of that. I can't teach it that. This is, I keep saying over and over again, there's no shortcut with an EA. You can't sit on a beach with an EA and make a fortune. If you could, I'd have been doing it by now. Or I just haven't found the right EA. There's plenty of them on the market. I've only tried about 25,000. I didn't find the one, the holy grail in there. That one wooden cup sitting amongst all those big shiny gold ones. I haven't found it. I'm not saying it doesn't exist. It's just saying it's a bloody hard search because I've been going for 14 years. I'm getting grey and I haven't found it. Most people trade with a small account, and that's the problem. That is the problem with trading. Education. Trading education teaches you if you've only got $1,000 to trade with, use this EA. Over leverage yourself to crap, and you might double your account in a month. And then you double your account in a month, you go, wow, this is amazing. I'm going to do that again. And then it blows the account. Why? Because you haven't got any leverage. You can't trade on 2K. You need 100K. If you want to make proper money in this job, you need 30 to 50K minimum and upwards. Otherwise, you've got no leverage. Look at this today. My mortgage is £1,650 a month. Yeah. Today, paid the mortgage. Yesterday, forget yesterday. Yesterday was a wipe. But that's the way you look at it. My car payment, £480 a month. Yeah. That is one opening range breakout trade. I can only say that because I'm trading $100,000. If I was trading a £2,000 account, I've got to double my account to pay my car and my mortgage. So I've got to leverage my account to 100%. It means I've got to risk 5 to 10% a trade if I'm ever going to have any chance of getting there. That is not consistent. You would not do that. That's what everybody teaches. That is not the way the world works. Everybody thinks they can make a lot of money. You got to think about it, right? Let's say you are the best trader in the world and you can return 25% a month consistently over a year, every month. If you had a $1,000 account, yeah, you're only going to make $250 a month. You can't live on that. I want to become a professional trader. What's your capital? $1,000. Good luck. Never going to happen. Oh, I'm going to compound it. Good luck. Good luck doubling your account for 6 months in a row to the point where you will just about get to 2,000 a month. Compounding is just the most ridiculous thing ever. It's just not. It works if you can over leverage the account to such an extent. But by over leveraging your account, you're putting too much risk on the table. Too much risk on the table blows accounts. Look at yesterday. I didn't put too much risk on the table yesterday. I just did stupid things yesterday afternoon, which I shouldn't have done. But I over leveraged myself to 0.75% on one trade. Yeah, so I lost, 1/4 of that is one position. But that was using a stop loss because it was a scalp strategy. And that's why I rely mainly on position trading rather than scalping, because it's safer. Or the opening range breakout. But once the opening range has done, that's it. I didn't trade any more this morning. I traded the DAX this morning. There. I got in there. I got out there. Done. I didn't touch it the rest of the day. That's what you want to do. And if you can over leverage and be lucky 5 times in a row, fine. But you won't be lucky 10 times in a row. Market doesn't work that way. Look at today. NASDAQ, prime example. That didn't happen. That's the only one you've got. And look at what you got there today. You got the opening range break there. Your stop loss would have been there. You've already lost one. Your stop loss was there. So a 1R return is there. So basically today, all you've done is short, stopped out, long, break even. That's it. All you've got so far in the market in the last 2 hours is a break even session on that strategy. Obviously, there's lots of strategies, but NASDAQ, we've just got a reversal alert, short. So watch that level. That didn't break. So yeah. So the profits, sorry, because maybe we'll trade with small gaps, so the profits for them is not beneficial. Yeah, that's what I just said. Rather than a 100K account or 50K account, no matter the system, I will risk 1%. Why risk 1% of your account? Why? I mean, I understand why, but to me, it's ludicrous. The fact that, there's no other job in the world where you would risk 1% of the capital of the business on a one deal. Yeah. So what you're doing is you're setting a business up and saying, I've got 100, I can do 100 deals. If 10 of those deals, right, and that's the thing, there's a spreadsheet on the website that explains it. But if you have a 100K account and you're risking 1%, the first trade, you're risking $1,000. If that loses, you're now on 99. So the next trade, you're risking $990. That loses, you lose another 1%. The next trade, you're risking 880. Or no, you're not. You're risking whatever you're risking, 990. Don't know. It's going down. But let's say we're down to 98K. Yeah. So you've got now to make back 2% of your account on the next trade. But that third one loses as well. So now you're down to 97K. You're 3K down. Psychologically now, your job is to make back 3K. How are you going to do that? I'm going to over leverage. Because you will have 10 trades in a row with every strategy ever known to mankind. There will be a loss of 10 trades in a row. So when that 100K turns into 90K, your job now is to try and get back to where you started. But you can't do it because risking 1% now isn't going to make you $1,000. It's going to make you 900. So you're now behind the curve. So you need to risk a little bit more so that you get that money back quicker. And then you make 5 trades back, but you won't get your 2-to-1 risk reward on them. Risk reward ratio helps. I knew you were going to say that. You won't do that. You won't do it because you're behind. So you will get out before your 2R return. Right? So let's say you've lost 3 trades in a row, you've lost $3,000. Right? A trade goes your way, and all of a sudden you're sitting in $1,200 of profit, and then you get a bear candle, you get a reversal alert, you're long, you're $1,200 in profit, you get a reversal alert. What are you going to do? Take it? Damn right you are. So what have you just done? That 2-to-1 risk reward strategy that you're trading has now become a 1.2-to-1 strategy. Not profitable because it's got a 50% strike rate. That's what kills everybody. You won't let your trades run when you've had a losing streak. And that's exactly what you want to do. Look at the ORB. Yeah, look at my P&L yesterday. I got back 2,000. I got 2% on that trade. I lost 3.8% yesterday, and I made 2% on one trade today. Why? Because I didn't touch it. I let my edge play out. My edge is to let those runners run. If I'd have got there and seen $1,000 in profit and pressed the close button, I would have been livid with myself. And what would that make me do? Overtrade and get cross with the market because I lost half of my money. My view is, and everybody's view is, if you close your position out there, you don't look at that as a positive. You look at it as a negative. Why? Because you lost half of the money. You didn't lose anything, did you? But your brain tells you you lost half of it. You missed half of it. You are wrong. So every time, and again, we'll cover it in the bootcamp as well, but every time you take a position off early, it's a negative, not a positive. Every winning trade is a negative. I go long, it goes up, I get out. I make 1.5% on my account. It continues going to 5%. That trade was wrong. Why was it wrong? Because I didn't get out in the right spot. It's just the wrong way. All the education, it's the wrong way to look at it. Am I cross because we're sitting at 150 ADR and I got out there? No. Because I followed the strategy. The strategy said to trail the stop. The stop trailed. It got me out. That's the edge. I've back tested this to death 50,000 times with different permutations, and every single one of them comes out profitable. That's the edge. The edge is that. The edge is not trying to capture that. But the edge is letting it play. Yeah. If I close it here, my edge is gone, isn't it? I've lost the edge. The edge is the strategy. Especially using smart money concepts on smaller time frames on 1 minute or 5 minute. Profit. I thought you'd watched the bootcamp and converted into a profitable trader, but you obviously haven't. I thought you'd watched the bootcamp and you became a position trader. It obviously didn't work for some reason. You're still talking about 4R on 5 minute charts and 1 minute charts, which I've told you many times. There is not one profitable trader in the world trading them. Not that I know. But I've only been trading 14 years and met 100,000 traders. So there's probably some out there that are, but I just haven't met them yet. I only speak from experience. You can't trade the 1 minute chart. The 1 minute chart is just, I don't even have it. Look. It's just chop. If you're trading the 1 minute chart, you are literally trading algorithmic chop. Where's it gone? 1 minute there. There's nothing in there that is logical whatsoever. The strike rate, if you get a strategy that works really well on the daily chart, yeah, and you move it down to the 4 hour chart, strike rate drops. If you move it down to the 1 hour, it moves down further. If you move it down to the 15 minute, it drops further. 5 minute, it drops further. By the time you get to the 1 minute chart, that strategy that works really well on the daily will be having a strike rate of 10% and losing, pretty much blowing an account within a month. Every strategy, because there is no edge on random. This is random market movement. There is no edge in random market movement. The only edge you can apply to randomness is a risk reward. Randomness has no consistent risk reward because it's random. This is a coin flip. Your odds are always 50%. Your strike rate will never exceed 50%. Your risk reward will never exceed 1R. everybody can say, whoa, look at that. Yeah, I can show you 1,000 times where that went the other way on chop. But you move that up to a daily chart and you took an RSI extension, for example, and you scaled into it, we know that the market has to do that because it's done that. And on the 1 minute chart, RSI and things like that, every indicator on the 1 minute chart is nonsense because it's giving you a historical lagging view of randomness. You just can't make money on the 1 minute chart. I've had so many people that bought the market reverse alerts indicator and they send me these, everybody's trading 1 minute chart on the VIX, volatility index, everything. People have set up Telegram groups dedicated to trading market structure reverse alerts on the 1 minute chart. They haven't posted in there for months. I don't even know. It's so far down my archive. I can't even find, there it is. Last post, 17th of January. That was somebody leaving the group. The last actual post on it was end of November. Yet this guy was making a fortune, killing it on the 1 minute chart on the VIX. Is he still around? No. Why? Because he had a lucky streak. Everyone can get lucky on a coin flip. I can get lucky on a coin flip. I can't get lucky on a coin flip for a month and make a living out of it. Stop doing it. It's not this. I know you can try, but it's. Come back and see me in 6 months' time after doing 1 minute trading. And if you are still profitable, I will definitely buy your strategy for £1 million. But I'm going to need a P&L. I'm only doing it out of love. I'm harsh. It's harsh love. Right. I'm going to go. Nothing's moving. I'm not interested in the indices this afternoon. And the euro's just hovering now. So waiting. So Euro Swiss, I'm not going to get into a second on it, unfortunately. I could do with this pushing down a little bit, actually. If we can get a new low in, at least I'll get a reversal alert in there, which means I'd get a second on. But we're not going anywhere at the minute. Euro CAD, we bounced off of ADR. Euro Pound, I've just taken my second. So there's a reversal alert on the 5 minute. There's your W reversal. So there's that double bottom. Perfect. So I'm in second position. Now my average is there. I need a tiny, tiny move to get out of this position. But I'm not going to because it's going here. Everything else is just sitting at the moment. Swiss yen I got into yesterday. That's still stuck at the minute. It's just stuck anyway. So just waiting on that one. CAD Swiss. So I've just first short on that. Just re-entered short on that one. Again, really good. Oil, back down again. It's coming off of there. But again, you see, look, I had the opportunity if I wanted to get out a break even. I don't want to because my bias is still like that. And if I've got the timing wrong and we need to get into another leg, I'll get into another leg. Every leg down in market structure is either a pullback, continuation leg. Yeah. And that's all I'm doing is I'm just getting in on the continuation legs, waiting for the market structure break. When the break happens and the structure shifts, that's when I make my money. I don't know. I can't time which one of these it's going to be. No one can ever time the bottom of a move. You just have to wait. You know what? Raja Banks came out today and said, SMC, Smart Money Concepts, Raja Banks trades Smart Money Concepts, put a video out today saying it's a load of rubbish. It's all a lie. He lost $100,000. There's a lot of Smart Money Concepts traders out there that aren't doing very smart. But I think that's just a viral. He's probably going to say in that video, actually, no, I lost 100,000 to make $1 million. Yeah, come buy my course. It's only 1 minute. It's all time frame. I gave an example. It's not only 1 minute. It's all time frames. Yeah. So So if right, that thing I just showed you, Quant Analyzer, all right? Let me show you something quickly before I go. Download your statement into Quant Analyzer. Okay. If you need convincing how you make money, come into here, go to trade analysis. P&L by trade duration, right? This here is what will show you how you make money. If you are trading the 1 minute chart, you will be holding your positions for a very short amount of time. If you look at this chart and you do not see the biggest, boldest green bars here and all the crap and the little ones and the losses all down here, right? If that is not the case, carry on doing what you're doing. If that is the case, carry on doing what you're doing. If that is not the case, stop trading 1 minute charts. Analyze your trading. This is going to be your 1 minute trades and your 5 minute trades, maybe. The vast majority of your 5 minute trades are going to sit in here. Your hourlies and everything are going to sit here. If this is not as green as this and this, stop doing this. You're wasting an awful lot of time and energy on that could be put into these things that make you the money. 1 hour, 5 minutes. Yeah. 1 day, 8 day. Those are my 15-minute entries and hourly entries. Where do I make my money? I don't trade the small ones. If you trade the small ones, it would be down here. If I was trading hour and 1 minute charts, I'd have a thing, this big stick down there. Because it's just random. Honestly, go and do this. This thing, Quant Analyzer. It will tell you what is working. I know you're not listening to me, Profster, because you're now saying that SMC is around MTA, and forget strategies. You're hunting for the strategy that's going to make you a load of money. This software here will just show you exactly how you make money and how you don't make money. So just eliminate the crap. So don't trade on a Tuesday. All of a sudden, I'm more profitable. Job done. This is very, very, very simple. Don't trade gold. There's instruments that I don't make money on. Stop trading them. It's really easy when you know what to look for. But go and do that as an experiment. It'll be worth you just looking at it. It'll be worth looking at it, honestly. It will help a lot. Right, Franco, you're off if you haven't gone already. I'll be back tomorrow morning, 7:50, same time. Be back as well, 2:20 for the New York session. We'll see if we can get some more money out of DAX in the morning. Just going to monitor these positions that I've got on. Cam, would you long 1 hour RSI, however, fundamental score is short? No. Aussie New Zealand? No. Well, I wouldn't, but you can. That's an ADR hit as well. Look, M5 reversal alert is, no, it's miles away. Look. This is telling you there's a massive sell on at the minute. So it's extended, yeah, but I wouldn't personally look at it. We're just pulling back at the moment on that leg. Retail, everything's pointing short, isn't it? So there's so many opportunities. That's the thing, this dash is not here to tell you to get into everything that is lit up. It's telling you there are opportunities that you need to go and look at the charts at. So Aussie dollar, New Zealand dollar is not even extended at the moment. It probably was, I guess, on the hourly. But when it's extended, I will open up my chart and go, do I want to short? Do I want to take a long? So we've double topped. We're extended to the downside. Are we at a level of support or resistance? If not, probably not. Are we in a propulsion gap that looks good? No. So we're just about to get an alert on this now. We're at ADR. Yes, there's a reason to, but are the fundamentals pointing in our direction? Is the trend right? There's lots of other things that need to go into the equation, which is why you can't just use indicators in your charts. You've got to have something else that gives you a directional bias, whether it be a moving average or what. But even they will fail. Yeah, every moving average will fail. I failed here, didn't I? I went long there. I got into 13% drawdown and closed out a load of the positions and took about a 9% loss. That was a squeeze, and I get squeezed every now and again. So every now and again you get one. But in the grand scheme of things, 9% is irrelevant. I'm making 10 to 15% a month. So what's 1 month out of 12 where I don't make money? Doesn't matter, does it? The long game. Focus on the long game. But yeah, I wouldn't take that personally, because the fundamentals are pointing the other way. So -5. So the fundamentals at the moment are saying we want to be shorting Aussie New Zealand. New Zealand dollar has frozen its interest rates. Yeah, first country to stop interest rate increase. Inflation, unemployment looking like it might not be under control. Cot positioning is short. Haven't got any retail on side, but if retail suddenly start to long it, that thing's going to come down. If you, because we've got an RSI extension, hit the long button, I'll be looking the other way, won't I? But it is, it's a sell. So, I get an RSI extension to the downside. I look at this and go, do I want to buy it? No. Decision made. But what I will do at some point this week or next week is I'll get an ADR hit to the upside or an RSI extension to the upside on the hourly, and I'll look at this and go, yeah, I want to sell it. But that's the way I do it. There's no right or wrong. If you want to just use RSI on the hourly, yeah, that's a sell. That's a buy. There's no reason why it won't. But look at the pressure. It's short. Look at the pressure when you get on RSI down here. It went up, can't do it, up, can't do it, up, can't do it, flop. Got stuck. Then it came out of RSI extension and went sideways. This is news. That's moving on the news. So if this does that now, you know why? Because the market is driving it short. So where do you want to get in? There. There. Or there. Or there. I don't know where. So I could get in there maybe. If I'm wrong, I'll get in again there. If I'm wrong, I'll get in again there. But I know the market is pushing that way. So if I'm wrong there and I'm wrong there, and that is where it turns, I get out like that. But like I say, take it long. What's the worst that can happen if you get in here? It pushes down to yesterday's low. Get in there. Why? Because you'll be extended even more, and you'll be at a double bottom, and you'll be at 150% of ADR, and you've got potential support coming up. So if you get in here and that doesn't work, you get in there and that doesn't work, you can get in here. If it goes like that without having any kind of profit take move, this thing's going to be down here somewhere. What happened last time it got down here? Breathe. What happened last time it got here? Breathe. What happened last time it got here? Breathe. Here. Breathe. It will always breathe. It has to, because if they're selling the crap out of it and they want to make money, they've got to buy it. So there's nothing wrong with taking it. I would much rather just take it in line with the big boys. But mean reversion will still work against trend. Counter trend, mean reversion works. This is currently in an uptrend, but it's part of a bigger downtrend. So that could work very easily. But it could also do that. Could do that, couldn't it? I don't know. We never know. We just need a reason to get in the market. But it's as I said it many times, like a stuck record. It's not when you get in that's important. It's how you manage the position once you're in it. That's what makes you the money. The reason for pressing the button is irrelevant because you've no idea if it's right or wrong. How you manage the position after you've pressed the button, that is how the money goes into your P&L. So if you like it long, take it. I have no clue whether it's going up or down. All I know is it's an ADR and RSI. Both of those are extended conditions, which we usually pull back from. I couldn't tell you if it's right or wrong, but I can tell you what to do if it's not right. If it's not right, you know where else you can go. So again, every time you press the button, look into the future. Draw it on your chart. I do this all the time in the live room, don't I? Draw it on my chart. I'm going long here. What am I hoping will happen? That. If that doesn't happen, what will happen next? Probably that. There's my best case scenario. One. There's my second best case scenario. What if that doesn't happen? Okay, well, then we're going to probably come down to the next support, aren't we? Which is there. Then that will happen. That's my third scenario. So worst case scenario, I will be 3 positions long on this with a possibility of maybe it being in 1.5% drawdown on my account. Do I care? No. Doesn't matter, does it? But you've got a good chance of it doing that. Haven't you? You've got a good chance of that working. You've got just as much chance of it doing that or that. There's not one person on this planet right now that can tell you which scenario is going to play out. Doesn't matter, does it? Get in the trade. Stop over-analyzing things. But, you know, again, I built this year. If this didn't exist, would you have taken that trade? You know, it doesn't matter, does it? Whether you've looked at this or haven't looked at this, it doesn't matter. This will help you press a button or not press a button. It's not going to make you any money, though. What's going to make you money is what happens after the button's been pressed and what buttons you press after the button's pressed. That's where the money's made, isn't it? So anyway, I've got to go because I've got other things to go and do. So I'm coming out of drawdown on oil. Oil's being schizophrenic today. Hopefully that pushes though. So oil, I'm just going to put a TP up somewhere up there. That one I will be getting out. Oh, there it is up there. Okay, I'll be back tomorrow morning. I've got to go. If you need anything, have a good spin. Yes, I will. I'm off spinning again. I'm addicted. You'll be back tomorrow 7:50, same time for the London session, DAX, and then I'll be back tomorrow afternoon, same time for the New York session, and then it's the weekend. All right, so overnight news, just to worry about. We've got Jordan, 5:30. Very rarely speaks. Just be aware of him. Other than that, 1:30 tomorrow afternoon, we've got Mr. Non-Farm. So tomorrow I'm going to stream 7:50 and I'm going to stream 1:20. So come on for Non-Farm probably. And we can watch that massacre unfold. All right, have a good one. Anything you need, I'll be in the Telegram group. Otherwise, I will see you guys tomorrow.